Mamaearth parent organization Honsa Consumers proposed 2,900 crore rupees initial public offering has raised valuation worries among financial backers and market specialists. Honsa has documented DRHP with SEBI for an initial public offering with a mix of a new issue of 400 crore rupees and a deal available to be purchased, OFS, of 46.8 million offers, supposedly totaling up to 2,900 crore rupees. The organization was esteemed at $1.2 billion in January 2022 when it brought $52 million up in a financing round drove by Sequoia. After 1 year, Honsa is looking for a valuation of $3 billion through its initial public offering. The valuation focus of Shark Tank India acclaimed Ghazal alleges Mamaearth is more than 1,000x its profits. Mamaearth's valuations have been addressed by a lot of people via web-based entertainment. Some have even thought about the grand valuation of the Mamaearth initial public offering to that of Paytm. A portion of the primary worries for financial backers incorporate high as can be valuation, over-the-top publicizing spends, and conflicting benefit has grabbed the eye of financial backers and experts. Toward the finish of FY22, Honsa Consumers posted a net profit of 14 crore rupees and incomes of 943 crore rupees. For the half-year finishing September 2022, the organization posted incomes of 722 crore rupees and profits of 3.6 crore rupees. The organization revealed a loss of 1,332 crore rupees in FY21 and 428 crore rupees in FY20, as per the DRHP. There is a tone of guess about the value Mamaearth will set for its first sale of stock. Typically, the merchant banker would decide the value nearer to the initial public offering date. The present moment, everybody is making suppositions in light of openly accessible data. We doubt that management will go ahead with the higher price because there has been a lot of backlash on social media, especially given the amount of money Mamaearth is asking. Whether you look at the market cap to sales ratio or the price to earnings ratio, which appears to be a little high, said Sunil Damania, Chief Investment Officer, Markets Mojo. It has been seen in the recent past that many IPOs, including Zomato, Paytm, and others, have not been able to sustain their high valuations and have dropped significantly since the listing. Something similar could occur if Mamaearth opts for such a high valuation. However, these are all speculative at the moment because neither the merchant banker nor the company has confirmed that they will proceed with this pricing, said Damania. The 1600x pay multiple is an unrealistic expectation, even in the middle of a bull run. Therefore, in the current market mood, this insane valuation requires an insane explanation. When I think it through, I wonder why I should not invest in Dabur or Marico, which are trading at 50 to 60 pay and have deeper distribution and higher brand recall. I am jittery about all IPOs where more than 25% of the money getting raised does not go to the business, i.e., it is an OFS from early investors and celebrity backers of the platform. I have understood that almost 80% of this IPO will go towards OFS, which does not bode well for public market investors. It will be challenging to see any upside in the stock price with so many questions on super premium valuation that will primarily provide exits to current shareholders, said Anirudh Adamani, founder, Artha Group. Mamaearth has been successful in establishing itself as a formidable D2C brand, perfecting both its product and distribution strategies. But it's important to note that large FMCG players such as Unilever and P&G have taken decades to reach where they are now, which means Mamaearth has a long way to go. Ankit Kedia, founder and lead investor at early-stage venture capital firm Capital A, was quoted saying in a YourStory report, Mamaearth depends on associations with specific commercial centers and web traffic drivers for deals through internet-based channel. The organization in its DRHP said, for monetary years 2020, 2021, and 2022 and the half-year time span finished 30th September 2022, our income from online channels across the entirety of our brands added up to around 998.43 million, 3,742.93 million rupees, 6,595.34 million rupees and 4,291.15 million rupees, separately, addressing 90.94%, 81.37%, 69.91% and 59.37% of our income from tasks, separately. The sum spent on publicizing and force to be reckoned with advertising likewise hangs out in the DRHP. As of 30th September 2022, Mamaearth worked with 3,958 powerhouses. The organization spent about 391 crore rupees on publicizing against net deals of 932 crore rupees, meaning it 40% of income was spent on advertising in FY22. The quantum was comparative for FY21, FY20 and the half-year time frame finished September 2022. Aditya Konwar of Complete Circle Capital in a tweet said, "This is excessively high. Specialists have the promoting spend number high given that the profit from advertisement spend, ROAS, has not improved from 2.6 throughout recent years." Conversely, Nykaa's FY22 ROAS remained at 7.8 and Large Kid Hindustan Unilever's at 10.6. Paytm's initial public offering esteemed the firm at about $19.5 to $20 billion. The organization had named the valuation judicious and fair at the time, even as it kept up with that it might have evaluated itself higher in view of revenue from outer financial backers. FSN Web-Based Business Adventures Ltd, the parent of beauty care products Area, fixed the value band of its initial public offering at Rs 1085 to 1125 an offer, as it looked for a valuation of around $7.4 billion or 52,574 crore rupees. PB Fintech or Policybazaar looked for a market cap of 44,041 crore rupees post-posting at the upper band of 980 rupees, which was named costly by specialists. Food conveyance organization Zomato's initial public offering was oversubscribed multiple times, providing it with a valuation of $12 billion. This multitude of four stocks have seen sharp decay since posting. Paytm shares have fallen more than 65% from initial public offering value, Zomato down around 55%, PB Fintech down 66%. And Nykaa shares have fallen more than 65% from the initial public offering issue cost.